running. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.
Hi, and welcome back to the Conscious Day Trader. Today's Friday, end of the week. We've had a great week. We're still running green since the new year. We want to keep that up. We had a close call this week, but we managed to trade 18 trades out of it. So repositioning, that's not single trades. But after commissions, we're currently running on 3,700, 2,829. I believe that's close to my best month, 823,866. Okay, so a very good week. And we are flying to Bali on mid of next week, so it's going to be compromised, but we're super happy with how it's gone. And what we're going to do is we're going to jump onto our trade, which happened yesterday, and it's a very good example of how to manage a trade when you've gone in early. So there's going to be entries, there's going to be management of that trade, there's going to be how we got the execution. So much information in this video. Make sure you like and subscribe to the channel, because then that motivates me to make more of these. And hopefully soon we'll do this from a sunny, sitting by the pool, a better view than this dark room. But let's see. Let's jump on to our trading view, and we're going to go to the London kill zone. And if you don't know what this is the FX market session that will give you these boxes and the pip count of what's been happening in either asset that you're using. So I keep an eye on the London session in New York, which I do 3 to 1 o'clock kill zone, for about 3 o'clock. That is the area where I'm looking for setups. And then the Tokyo session is there. And if we go on to the hour, this is the current state of the US dollar on Friday. We're going to analyze Thursday's trade, and this trade today, which was a very good trade on the euro dollar, haven't traded the euro dollar for a while, was based on this gap being filled on the US dollar index, which meant that the dollar was dropping. So I was long on the euro dollar, and I could have held it because it's gone all the way below to equilibrium and now touched the fair value gap on this area. But this trade is we're going to go into detail. We made about $576, super good trade, and it was very clean for a change. This week has been a tricky week because my bias has been slightly off, but it just shows even when you have bad weeks and your bias is off, you can still make opportunities in the market. So what we're going to do is jump the price. We're going to go to the 15-minute and jump the price to the session, the previous London session, and we're going to go around 7 o'clock. But this is where we want to go one day before to check the information that we had and to add the Fibonacci to make sure that we get that 50% level, which will give you your discounted and your premium price range from the previous day. That doesn't mean it's quite an interesting one, because technically, if you're at a premium range, you should be shorting. If you're in a discount range, you should be longing. However, with the Forex market at the moment, that just tells you where it is in related to the previous day. You want to be taking the sort of bias on bigger picture. So what is the bigger picture of that move? And now we've come up and filled this fair value gap. So that was, even though you were in a premium, that could be pushing even higher to fill this fair value gap on the day. We were here on the open of that session, so around equilibrium. So let's go on to the 15-minute. We were hovering around equilibrium. Now, I was shorting pound dollar, and we're going to see why. Because first of all, I thought that the dollar index will be going higher. And it did go higher, tapped into this, and then came down, lost a lot of, so the dollar was weak, and it came back and touched the previous daily range. Now, obviously that was going against me on the pound dollar because I was shorting this, so I needed to manage this. So my next thought on the dollar index is like where this price can be going. And we had a 15 fair value gap on this. We had sell side liquidity below here. So these are the areas, and you can see we had a gap that was filled and this momentum that built. So this was an area where I was like in management mode. Price was coming against me, and it came all the way down, filled the fair value gap here on the 15, and then pushed higher all the way back to equilibrium. Now, I entered a bit early on this, so I had to sit in a bit of heat, and we'll see why I entered it early. However, thinking back, I could have waited for a bit more confirmation, and that's what I needed to better for the next trades. But let's go on the daily. You're going to see some new lines. I've started incorporating from my previous trading my scruffy levels. You know, like the red candle, the red, yellow and black, they make sense in terms of scruffy trading, and I'm going to switch them on and off just to show you how different concepts can also work. So this is obviously ICT 2022 fair value gap setups, looking at premium price, discounted range, and looking at sweeps of liquidity around sell side liquidity and buy side liquidity. But also if you throw, and it's a cool tool that you can do, you can just have different setups like the levels here. I can switch them on and off and just see, can I get extra confirmation from how I was trading previously with the scruffy levels. And as we're going to see very soon, they are spot on. So for now, I'm just going to add all the lines that I had, and I've put some detailed commentary. So grab a coffee, because this is going to be quite interesting on how I see a bit of tape reading that was happening live. So I want to show everything apart from the levels. What we're going to do is look at what has the price done and what is the arena of trading. Okay, so I was looking for bias. I could see that the move from this top range here started here, the first red candle, found the low around there. So the price has come back, broke into the 23%, and then came back onto the 50%. And now was hovering around the 50%. So my thesis was that you had two areas here. We had this candle here, which is the first green candle, sort of the order block of this move here. So that sell off, and then we had a bit of retracement and closed green. So if I took the line of that, which I have done already, and we can open it, you'll see that the bottom line is exactly on the 50%. The top line is exactly on the 61%. Okay, and the midline is between that golden eye of the 50 and 61. So my thesis was that the price, even if I might be getting in early, let's take the magnet out, is gonna be coming down. Okay, so we talked about the dollar index where I thought it was gonna be retracing. However, that carried on. You're gonna see that what that looks like in terms of going against me. So I thought that we're going to find a retracement. So I was looking for a better price to short this into sell side liquidity belows here. So where could that price go? The price was at the top of the previous daily high. And I'm going to leave this golden eye in there so you can see. What you need to remember in terms of ICT, that green candle that had the indecision above and below, and the range is this range here, is exactly the golden eye. So I wanted to get in on the bottom of that candle, the green candle of that order block, the middle range and the top, and to trade it down. So soon as we opened, we had a bit of a movement down, and then we broke aggressively with 44 pips open, into that golden zone. And this was my entry to short this market. And then I thought I was getting even better price around the top range of that 61.8. So I added into my second position. Now, what did I want to do? My worst case scenario, I'm going to switch on the drawings, was that it's going to come back to the middle range of this candle here. And also this is a fair value gap. If I delete that, you can see the fair value gap from that candle there to that candle there. If you extend that across, we have hit that fair value gap. More indication that this potentially will be reversing. However, the scary thing is that sometimes we've seen it, that the whole, let me move my camera, that the whole fair value gap can be filled. Okay, so this price could potentially come all the way to the top here. And that I would have definitely been stopped out there. So what we're going to do is, as we move on to the candles, we're going to see how the levels that I've added, and I think this is a good time. Remember this fair value gap. Now we have that bigger picture of what was happening in terms of that fib retracement and filling that fair value gap. We had these black lines, which was the bottom of that green candle of the order block and the midpoint and that point. And you're going to see when we zoom in to this area, I've added what I was looking at and how I entered into the trade. So the price came here, and then I was monitoring this on the 1 minute. It touched that bottom fair value, the order block, so the green candle, the first green candle from the delivery of the price, and I've written here fair value gap filled. Price should continue. This is the midpoint of that green candle. Should continue up top side of order block. It is also the 61% retracement. And this happened at 8:44 into the London session. If it breaks the swing low, could be this the high of the session. This is what I was thinking. Okay, so obviously I was very wrong because this went all the way up here. So already I'm thinking this is the top of the session. And I was entered in there. Now this price came down and then came up and filled this fair value gap on the top side, as you can see. So we saw that fill gap. This was where I was getting nervous in case that this pushes higher, as it filled on the long side, going against me. Came down. And then here, at this stage here, it failed to break the top of this price here. So I was saying failed to break the swing high at 9 a.m. So I'm starting to think, is this giving me more strength of my thesis that this is the top of the session of the London kill zone, especially if you look on the kill zone, we're past midpoint, getting closer to the end of the London kill zone setup. So then we continue, create another low, a lower low, and this is quite an interesting, I'm going to bring it back here. This is quite an interesting place, because if you had seen from ICTs, not in the 22 mentorship, but the sort of breaker where you have a swing high broken by another swing high, so this liquidity above this area here is taken out, creates a lower, which it didn't, and then a lower low, which it did, and comes back lower and then retests this. So this potentially could have happened here. So you can see we had a swing high, however, this didn't break. So it wasn't a valid breaker. But at the time, I was looking for that. I was also looking, is this going to come lower, retest this level, and then continue lower? So as we had all this, at 9:31, I said it failed to break intermediate swing low, however, took out liquidity of the short-term low, this one here. So it took out this liquidity. Is this indication to break higher prior to London kill zone? Because what we did was happened in the past. This wants to come down, but you've got all this liquidity sitting above, and it takes it out before it continues lower. So then this came down, filled that fair value gap there. pushed higher. And at this stage, I was fully committed into the trade. We can take this one out. So at this 9.53, getting close to the London kill zone, failed to break the swing highs at 9.43 and 43. Before here, I started at 54 saying, okay, now it's going to be stop hunting area. So what this is going to do is going to come up, take the liquidity area from this high, and this high, and then continue lower. And this was coming, it came up to buy side liquidity here from a previous high on the left side, and it created exactly equal highs. What I was also looking at the index as well. And as I showed you, that took out sell side liquidity. At 9.15, sell side liquidity was taken out. So that was giving me indication that the dollar could be becoming strong. So I was looking for a short. That didn't happen. It continued up, and now we're at the top range of that green candle on the daily, which was like we had the 2 wicks, we had the bottom, the top. So now we're at 61.8% of the fib retracement of that big move on the daily. So I was saying here, 10.30, target delivered. So price has gone back to fill the fair value gap from the daily, and it's hit the 61%. I thought that this is going to continue down. Now, during these moves, remember, I am getting better price. And this is where people get confused with my stops. If I've entered here, and that's my first trade, let's see how far against me it would go. And I added at sell side, and then it came down. So this range here would be 6 pips. And then I would kill that trade, and because I have a better position here. And then that would come back down. I would add here, kill that position, and now I'm getting better price going up. That works as long as you don't have a huge aggressive move that's never going to return. So my basis of the trade was that this price at worst case scenario is going to come to the 76.4. If it broke above the 76.4 and filled the whole fair value gap, then I would be out of the trade and I would have taken a loss. But as you can see, the price kept coming up to this area here. So this was looking quite good now because I was getting into my profits and I was getting better price. However, I was still down because I had entered quite low. My maximum exposure yesterday on that trade was around 1,800. As I've said, I kill the trades around 2,000. Especially depending on where my targets are. So I had planned to get out and try and minimize the risk as I'm getting into the 76.4 and repositioning and killing trades that I don't want, repositioning trades that I do want, and then slowly getting to that top end. And when I get to that top end, I want to be in a place where my one position is sort of cancelling the bottom position, and then I'm getting a better price going down into profit. So as you can see, the price kept coming up and I was repositioning and we were getting close to where my sort of area was. Okay, I've got wrong. As you know, I've been dealing with this all the way up. I thought this was a stop hunt up to this point, then came down, delivered me. I could kill my bad positions and get a better price. Now my exposure wasn't so big, so I could trade. I could trade it into my worst case scenario. So at this lunchtime area, I went for a walk, came back for the New York sort of session. Let's see, open the New York, and soon as that opened here, it went all the way up. And I was confident that 76.4 was going to hold. So I was looking to add some position here. It was a bit naughty in terms that I did add on the top of this, on the 76.4 hit. With ICT, you wait for the confirmation of the lows to be broken, and then you get a fair value gap and you would continue down. I didn't do that because I wanted to get as high as much price, because my idea is coming from the daily. I have a strong... I'm not just looking at a swing and jumping in. I had a strong indication that the price could potentially stop there. And if it didn't, I would have to take the loss. But it created double top on the 76.4. That's where I had my 2 positions in, and I had 1 against me, so I had to trade it. And then we had some beautiful delivery of ICT fair value. And as you can see, we had equal top, fair value gap filled, came down, created a lower equal top, and this is the break, and this is where you should be getting in with the ICT. So you would get into this fair value gap, came and touched this previous low of this block here, and delivered a price down. Then it came back up, hovered, consolidated for a while, and I killed the trade around this. Now, how far could I have followed my trail stop? As you can see, this delivered nicely. So now we're at the bottom side of that, which was the 50%. So I was expecting this to have a reaction. We had the 50%, the mid-range of the golden eye, sort of the, and then the 61 here. 76 was the top, came down, and now we're hovering around 50%. So this was quite interesting because we're close to the previous daily high, and we're going to see how the price, you see these candles here, how they've sort of stopped moving. And this is now late into the London session. So let's take out the Luty play and see what happened. It hit the 76, came back up, and this is where you would get in on your fair value gap. You could add position here, and it delivered a price all the way down to equilibrium. And now we're into the Tokyo session and so on to the previous daily high. So a really good trade. Yes, we had to sit a little bit of heat. And in terms of people that are going to ask me about stops, because I always get maybe five people asking me about the same question about stops, that your stops are too wide. Yes, this works for me. As of now, if we go back to our calendar, we had a really good 10K month last week, and we had a really good so far February month. And I'm trying to decrease the positions. I want to get better at not having to reposition the trade so many times. So today I only did, on the Friday, which is going to be tomorrow's video, 4 repositions for a better price, and that gave me the profits. On Wednesday, which was a bit of a difficult trade, and I got very close to being stopped out for $2,000 loss, which is, it's roughly 4 days of work, and that's why I base it on that, because I can recover that loss quite quickly. And that came like 1.5, or it was extremely close. I was quite not nervous. I would have killed the trade, but it was very close to killing that trade. It was a bad entry. However, it did work out in the end. And this is the good point. Know what works for you. If your stop loss needs to be 3 to 4 pip, like ICT 2022, do that. Don't follow my stop loss or my management, because I do a lot of things that I'm not sharing on this video channel in terms of how I exactly manage my trade. And I want to keep that to myself. But in terms of the ICT concept and fair value gaps, I'm showing you how that is working out in terms of delivery. Now you need to do your own risk management and how you deal with your stops, and how you get your profits and so on. What works for you won't work for me, and what works for me won't work for you. But in terms of the concept of delivery of the price and execution, we're pretty much trading the similar way if you're doing the ICT 2022. And like I said, I didn't show all of the levels, but scruffy levels would also work. If you're a scruffy trader, you would have seen that. If you don't know who Scruffy Trader is, make sure you go and check out his channel. That's how I passed the bootcamp. And ICT has been able for me to trade with a bigger lot size, because I'm on a lower time frame, and manage my trade very carefully. And it gives me sort of more profit with less risk, because I know how to reposition my size. I know it sounds counterintuitive that you're getting a bigger size and you're in a lower time frame, so risk should be increasing. But the way that I'm trading and how I'm managing the trade, it's become less, because I have a fixed loss around 2,000. And if I'm like extremely confident that my trade is going to be correct, maybe 2,500, and that would give me a whole week's week losses. So I would have to recover a week. But if I've made like 10K and I take a loss for a week for 2,000, I'm still making 8,000. So it works for me. It doesn't work for everyone. I hope this has been helpful. And if you're still confused about things, make sure you drop a message on the comments. And I always try and reply. It might take a few hours, or I try and mix it. I've gotten a lot of requests about live trading. Live trading is very hard. You know, you're having people commenting on your trades. It's extra stress. Yes, you can delete the trades, but you're still aware that people are looking at you. You also have people taking trades on what you're saying, and I don't want to do that. Sort of like a signal service. Just because, you know, I trade differently. When I press the button might not be the right time that you should be pressing the button, or you might be trading, managing your trades wrong. So I don't want that heat. What I am planning to do though in Bali for the people that are requesting the lives is just to turn on the screen, maybe on a session that I'm not trading, and just run you through live what I'm seeing, both if the price is going to go long and if it's going to go short. And that way you can make your own decisions. You know, I'm just sharing my thoughts, commentary if you want, on the current price and the markets. So I'm not actually delivering signals. I'm just explaining what I'm seeing, a bit like ICT does on the demo account. So if you want to see more of that, make sure you like and subscribe. Share this video to someone who is an ICT student and wants to follow the journey as well. And next week, I think I'm going to trade Monday and Tuesday. Obviously, we're flying. So next week is going to be a bit tricky to trade. So I might share the journey of getting into in Canggu, where it's going to be the area where we're going to live. And I'm going to post a video tomorrow on the euro dollar. I haven't traded euro dollar for a while, so stay tuned for that. Very clean, super clean ICT tape reading, and looking at index and the gap and how it filled. And I hope you have a good weekend. It is weekend, it's Friday, and I'll catch you Monday. Have a good one. Actually, tomorrow. Have a good one.
I can't take no loss. I don't even know what it